Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 5th of September 2019, and we're taking a brief look at how ethical investments are on the rise, what this means for the investor, and a growing opportunity to participate in crowdfunding to take advantage of this investment shift in priorities. Let's take a look. Now, before we look at this subject, we would like to draw to our subscribers' attention that yesterday we published 3 videos and feel that due to the relatively low numbers who actually listened to all 3, that perhaps we have to assume that this is too many for one day. So we shall generally in future tend to restrict ourselves to 1 video a day, and then any surplus that we produce we shall place in the inner sanctum. Now, for those who may have missed those videos, some of them are quite important, and they are as follows, and we've placed a link in the description below. The first was how to buy silver below spot price even when prices are rising. And an interesting thing is that one of our subscribers has stated that she has actually gone ahead and done that and made a purchase. The second is a strong dollar good for the United States? And this is particularly important simply because, quite frankly, there are so many myths out there that a strong dollar is negative and other myths that it's totally positive, whereas the answer is somewhere between the two. And the third is Brexit Parliament Update 4th of September 2019, where I question, controversially, Greg, as to what actually went on in Parliament yesterday concerning Brexit, and this does have an impact both on Europe and the rest of the world. It is quite a long video, admittedly, but controversially, Greg does actually highlight an historical basis as to how we've got to where we are. So for those who perhaps are not fully familiar with Brexit and what it means, it might be worth a listen. Anyway, back to ethical investments. Now, whether we like it or not, or agree with it or not, there is a growing trend towards ethical investments, including those companies who declare themselves to be environmentally friendly. These are becoming particularly attractive to younger investors, who, to be fair, have generally less money at present than some of us older ones, but in time will dominate the investment space. Now, today we've come across an article published in the magazine for investment advisors entitled Financial Advisor. And the article is written by Dan Hurd, who is the head of corporate finance at Triodos Bank. Now, for those of you who have never heard of Triodos Bank, by way of background, it is a bank based in the Netherlands with branches in Belgium, Germany, United Kingdom and Spain. It claims to be a pioneer in ethical banking. Triodos Bank finances companies which it thinks adds cultural value and benefit both people and the environment. Now, of course, we're going to expect Dan to be biased by nature of his job, but the article is of interest and points out 3 important elements. 1. Some parts of ethical investing are going mainstream. 2. Many crowdfunding platforms offer access to ethical investments. And 3, the industry needs a common taxonomy, or a more transparent means of classification and identification, and then ultimately comparison. Now, here is the article, and please, when this video is completed, let us know what you think of the principles behind it, and whether you agree that this is a trend that is going to continue to grow, or not, as the case may be. Here is the article. Ethical Investments on the Rise by Dan Hurd, Head of Corporate Finance at Triodos Bank. Interest in aligning money to address big societal issues is growing rapidly in the United Kingdom, And there's both a widening set of terms and a growing range of investment opportunities for investors. Some parts of the sector are going mainstream, with elements of ethical investing now standard within all funds, not just those with an ethical badge. And the government established a social impact investment task force last year that aims to take impact investing to scale. The evolution of the sector has been inspiring to watch and to be part of. The industry is being encouraged by a range of sources, including the Governor of the Bank of England, Mark Carney, to integrate the monitoring of climate-related financial risks into its work. This, coupled with recent heightened public awareness and appetite for how money and investments can impact climate change and other societal issues, means that there is undoubtedly a growing movement towards greater mindfulness in good investing. Investors are now faced with a plethora of options and can broadly select impact-related investments by using a sliding scale approach. In simple terms, these range from do no harm type investments to making progress on environmental, social and governance factors, right through to creating positive social or environmental impact type investments. The key decisions for the investor are around how much investment risk they're willing to take, return expectations and liquidity. For example, investing in a listed ethical fund or directly in an individual organization through crowdfunding. A growing number of retail and institutional investors are choosing to make direct investments in impact-driven businesses through crowdfunding platforms. Direct investing enables investors to choose each company they invest in so they can ensure that the investment meets both the targeted financial and positive impact return on investment, known as the blended return. These types of investment opportunities are attractive to ordinary retail investors due to the ease of access. Many crowdfunding platforms offer bonds and equities, often with tax reliefs attached, and a low minimum investment of just £50 or less, which means that investors can make an informed personal decision and build an investment portfolio suitable for their requirements. Direct single investments for positive change can be higher risk compared to investing in a portfolio through a fund. Many investors balance this against the prospect of higher returns, more direct impact and the satisfaction that comes from a higher level of personal decision-making and involvement, which often are the tipping points. And of course, many investors will make direct investments alongside investing through funds. Direct investments can be transformative. For example, community groups bringing valuable services, renewable energy and retained profits being delivered for local communities, charities scaling up their commercial operations, or green tech business raising development finance. Pioneering organizations are now able to access capital to enable them to do amazing things, which is extremely empowering. However, as the sector continues to grow and flourish, it is only right to ensure the impact is truly positive. With its fast pace and adoption of the terms, there is a risk that without common taxonomy and standards, there could be a variety of claims as to what positive impact actually is. Therefore, there are distinct calls to action for both investors and direct impact investment providers to bolster the sector. For investors to help judge whether an investment is delivering a positive impact that they are happy to support and whether it is with their risk appetite, they should look under the bonnet of an opportunity. They should ask themselves, do they trust the investment provider? Is the information easy to access and clear? Do they understand the business and the investment risks involved, as well as what impact they expect to see? Does this investment meet their returns and impact requirements? With more direct ethical investment opportunities out there, and with a continuing drive from more investors and potential investors to want to use their money positively, direct investing will undoubtedly become more mainstream. A development economics estimate evaluated the expected contribution to ethical investing by age group and has estimated that 18 to 34-year-olds will increase their contribution ninefold from 2019 to 2027 to more than £900 million. It is an exciting and positive time for everyone involved. It is clearly the time to have industry-wide definitions on what positive impact looks like, and to make navigating the options for ethical investment more straightforward for the average investor. Finally, while those of us working in the industry will always want direct ethical investments to be predominantly known for the impact they deliver, it is also very important to keep letting people know that they continue to match up alongside mainstream commercial investing as good investments in their own right. So, there we have it. A little long and slightly technical, but certainly as far as Dan is concerned, this is an area of growth. And as he points out, although it has its own risks, crowdfunding may indeed prove to be an effective way for investors to invest in individual businesses which satisfy their ethical and environmental priorities. What do you think? And also consider whether this sort of stance can apply to gold and silver and other precious metal miners too, bearing in mind how difficult, dirty very often, and industrial the extraction of these metals from the earth can prove to be. Is there a competitive edge for those who perhaps are more environmentally friendly? Let's hear from you. It will be great to see your views and to see if anything new is raised amongst them. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.